we were learning about financial statements. And so we did problem or question 13 in Connect. You guys remember that, right? And we already did this. We already came up with an answer. I wrote the answer up here so that we all remembered what it was. And there's a reason we need to remember what it was. But very quickly, we filled in this particular problem. We took consulting fees earned of $14,000 and we deducted all of those different expenses to get net income of $2210 or $2110, excuse me, $2110. You guys remember that? We filled out all the labels and all that good stuff? Okay. So we're moving on to the next question because we did not finish all of our financial statements. So we have the next financial statement. Remember, we go in a particular order because we take the answer from one financial statement and we use it to prepare the next financial statement, right? So the next one is the statement of retained earnings. This list of accounts and balances is the exact same list of accounts and balances that was presented in problem 13. We're just continuing. So, real answers, that's the company name, remember, Keisha King. And we need to select an appropriate format for the date. So we have a drop-down list here. Who can tell me which one is the correct format? John. Yes, for the month ended October 31st. Very good. Okay, now, the statement of retained earnings is really a summary of what the owner of the company or the owners of the company started out with and what they ended up with at the end of the month, given the activity that took place during the month. All right, now Keisha, this was her first month of business. And so it's like, I think I used the example the other day. If you've never had a job, you have no money, your bank account balance is zero. So on October the 1st, Keisha just started this company. But before she gave the company any money or any assets, the balance was what? Zero. So we've got to find a label first. Remember, all of our values have to have a label attached to them. So we're evaluating the statement of retained earnings for the month of October, which means October 1st through October 31st. So we start out with the beginning balance of the month. And because this is a new business, it is zero. Because it's a new business, it's zero. So we say retained earnings, October 1st, zero balance. And you'll notice that that automatically added up for us there. All right, who remembers what I add to retained earnings? What activities took place during the month that affect the owner? What's the first financial statement we completed? The income statement, right? What was our answer from the income statement? Our net income was $2,110, and that represented revenues that were earned minus expenses that were incurred, all right? So our drop-down list is kind of nice because we only have 3 things to pick from here, right? So we should have a pretty good chance of getting it, right? We're going to add net income, and that comes from the previous problem. That's why I wrote it on the board so we had it. In other words, the owner gives money to the business, and then they go to work. The net income represents the amount they earned from providing the service that they do. So in October, Keisha just opened this business. She didn't have anything on the first day. Then she provided her consulting services, and she earned revenues of $14,000. We deducted all of our expenses. Her net income was $2110. That's what was left over. That was her net income. All right, so kind of think of it this way. You got your first job. You worked for a month, and you're getting a paycheck for $2,110. All right? Now, you can choose to keep that money saved, right? Or in this case, retained in the business. You personally can choose to put it in a savings account, or you can take some of it and spend it, right? Which account represents the owner withdrew or spent some of the money? Dividends, yes. Look up here. Cash dividends, $2,000. So of the $2110 that Keisha earned, she withdrew $2,000. So again, our drop-down list, less dividends. Why less? Why the word less? What sign do we have in front of our dividends in our transaction analysis columns? a minus sign. So less 2,000 bucks. Okay, now, when I take, and this is, I didn't mention this, but I should have. This is a subtotal right here, so there's no label necessary. You don't even actually need it. But you'll see that this is not completely outlined in that ugly color, gold, whatever it is, yellow. It's just a subtotal. You don't really need it, so it doesn't need a label. Okay, so less dividends. So 2110 less 2,000 is how much? 110, right? What do we call that? Because I need a label. See how this is highlighted in yellow over here? What do I call that on your list? Retained earnings, October 31st. So what we did was we evaluated the earnings that Keisha retained during the month of October, considering the money that she made in the month as well. So again, you got a paycheck for $21.10. You're pretty excited because it's your first paycheck, so you decide to spend almost all of it. So you take 2,000 bucks, you keep 110 in the bank. That's what you've retained. It's the same idea. Keisha withdrew 2,000. She retained in the business 110. Not very much, but she retained a little bit. Okay. If we were moving on to November, assuming that Keisha's going to continue in business, what would her November 1st retained earnings balance be? 110. Why? Let me ask you a question. Well, this is already September 2nd, but if you had $500 in the bank on August 31st and you didn't spend any money, excuse me, you didn't get paid, you didn't spend any money, nothing changed your bank account. When you woke up on September 1st, how much money should have been in your bank account? $500, right? The ending balance of one month becomes the beginning balance for the next month. That's why she had zero retained earnings on October 1st, because she wasn't in business on September 30th. Make sense? Now she's going to continue, so her ending balance becomes her beginning from this point on. Does that make sense? All right. Now I need this number for the next financial statement, so that's why I wrote it down here. So you remember they're all connected, right? Net income, statement of retained earnings. As we move to problem 15, which is the balance sheet, that number I'm going to need. Before I do that, though, does anyone have any questions? Graded homework. Remember, that's due on Monday. Perhaps some of you have had an opportunity to take a look at it, so this should look familiar. The graded homework is two parts. Transaction analysis. We did several of those in class. Then second part is financial statements. Remember, folks, there's one financial statement in that graded assignment that you do not have to complete. It is the statement of cash flows. If you get everything else right, when you submit that, you're not going to see 20 out of 20. That's how many points the problem's worth, because I cannot remove that cash flow component from that problem. And so I have to, after you're done, after everybody's submitted it or the due date comes and goes, I will go in and manually change. Anyone who's gotten everything right but the cash flow statement will get a 20 out of 20. All right? If you want to try the cash flow statement, that's fine, but you don't have to do it. I'm not covering it. Questions? All right, we're quiet today. All right, number 15. So now we want to prepare a balance sheet for Keisha. And again, keeping in mind that we are going to need the solution from question 14 to finish off question 15. But remember, the balance sheet very simply is just a reproduction of my accounting equation, right? My assets on the left, so my assets are going to go on the left, making sure this kind of center point represents that equal sign, equals my liabilities and my equity on the right. And what that tells me is that it's kind of a snapshot of my business at this particular moment in time, and it lets me know what I currently have, what I owe, what I own, okay? All right, so the first thing we want to do is we want to pick the correct date format. Which one is it in this case? Which one am I selecting here? Cool. Yes, as of October 31st. It's different from, okay, well, yes, pick something, right? It's different from the income statement and the statement of retained earnings. Those dates are expressed a little differently. Remember, I said you got to trust me on this. Once we get through material in chapter 3, I'll be able to explain to you why it's different. But right now, you just have to trust that it's different. Okay, remember, when you're doing the homework, if you submit your homework and you've got all the numbers in there that you're supposed to have, but you're still not getting a perfect score, it may be because you're missing a label. We're looking for labels here. So what category of items am I going to be presenting on the left side? What do I want this to be?
Assets.
Assets, correct. So if I look just up above my list, and remember that list came from someone completing a transaction analysis for the month of October, right? Remember the columns that we used? Those totals across the bottom? That's where all those numbers came from. So all we're doing, folks, is we're just selecting those same account names and entering the values next to them. So which accounts are assets? Can someone tell me? Cash? Accounts receivable? Equipment? And you can do this. This does have an autofill. What else? Cash, accounts receivable, office equipment, office supplies, and land. Now notice what starts to happen as I enter the values. Don't even need a calculator at this point, right? Just make sure you're entering these in here correctly. Because most likely if you have a mistake, it's just because you didn't enter a number or a value in here right. That's the most common error. Okay. Once you're done, you've got a total, 92,610. Don't be fooled by the space here. Just because there are extra spaces doesn't mean that you're missing something. All right? Over here on the right side, we needed the extra space for this side. So it ended up, having an extra space on the left. But just because you have extra spaces doesn't mean that there has to be something in there. There is something I'm missing, though. If I were to check my work, I'd have one little thing wrong. What is it? What am I missing? What is it? What do I call this number? 92,610. What is that? Not net income. What am I listing here? Assets. So that's just my total assets. Correct. Yep. So remember, net income was on the income statement. We used it on the statement of retained earnings. Here we're looking for total, I'm in the wrong place, that's why. Total assets, okay? The drop-down list is nice because it limits you to certain account names to pick from, okay? It limits you. All right, so 92,610 on the left. I move over to the right. What's the first label I want to give this column here? What am I listing next? Liabilities. I'm going just in the order of the accounting equation. Do I have any liabilities? I have accounts payable. Remember, key word there in that account name is payable. Anytime you see the word payable, you want to identify it as a liability, right? And that amount is $8,500. Now, you do not need a subtotal or a total here. You only have one liability account. It is the total. So you don't need to repeat the number and call it a total. You don't have to total that. If there was more than one, then you would total it. There's not, so we just leave it as is. Again, extra spaces that I don't need. Don't be confused by that. So assets, liabilities, what's my third category here? Equity. Equity consists of two major groupings. What are they? If you're not sure, you've got notes, you've got slides. What are the two major groupings? I wrote these down. We looked at them. We talked about them. Common stock and retained earnings. All right, excellent. Common stock and retained earnings. So common stock, I'm going to find that in my list here. Up top, common stock is $84,000. Retained earnings, where do I get that number? Not consulting fees earned. Where do I get? It's part of it. It goes into the calculation of retained earnings, but where do I get that number? Not the same as total assets, because look where I'm at right now. Look. I have total assets of 92,610. I want this to be 92,610 eventually. I have to equal. Where do I get it? Jeremy? My previous, remember that previous problem? I wrote that up here for a reason where we got retained earnings was 110. That number has to go on the balance sheet, and here's where it goes, okay? So this is a great example. They're all connected. So when I enter the 110, that came from the previous financial statement. Look what happens to my total assets, and I'm missing a label. Right across from total assets, my label should read what? What's the correct label there? What did I add up to get 92,610 on the right side?
Total liabilities and equity.
Yes, thank you. Total liabilities and equity. And because if I don't select that label, it's going to deduct points. And then you're like, oh, my numbers are right. Why am I getting points deducted? Because you have to select the label. All right? So my assets on the left equal my liabilities and my equity on the right. And remember that great feature? Check my work before you submit. Check my work gives you green check marks, red X's if there are any, but it also tells you that your answer is complete and correct. So it tells we filled in everything that we need to fill in. All right? Then you can submit. Have any of you tried the homework assignment yet? Not that you have to, but if you're working on it. Okay, great. So hopefully you're using this check my work feature, and if you're not ready to submit because you're just working on it, you have save and exit up here. When you come back in, you should pick up where you left off. Once you're confident that everything is correct, then you can hit submit. But remember, you can submit as many times as you need to within that due date of the assignment till you get it right. Submit, though, the difference between submit and check my work is submit will give you feedback, right? Check my work just says if it's right or wrong. It doesn't tell you why. But when you submit, if something is wrong, it'll give you feedback on the assignment. That helps you then correct your mistakes so that you can then redo the assignment and get it right, preparing you for exam questions. Everybody with me? You good? All right, any questions at all before we move on to chapter 2? Because today we're starting chapter 2. Okay, we're super quiet today. All right, I'm going to head back to Blackboard here. Moving over to week 2 content, that's where your chapter 2 PowerPoints are. You can look up here if you don't have. The retained earnings came from the previous problem. So we did question 14, and that was our answer from question 14. And we used that. We use that answer from question 14 then. So use a final answer that you get at the bottom.
No.
Oh. Yeah, I'll have to look at it because everybody's numbers are different. When you guys have questions about your homework, your graded homework, I need you to bring your computers to me. So I'm glad because I had a couple people asking me questions. I should have thought of this earlier, but I didn't. So when you're doing graded homework and you say, I'm not getting the right answer, I need to see your computer because all of your numbers are different. Nobody has the same data set. So it's not like I have an answer key that is the same answer for everyone. I actually need to see yours because I need to see your data set so I can figure out what your answer is supposed to be. Does that make sense? Without it, I don't know because I don't know what numbers are being used in your particular problem. So you're going to most likely have to bring me your computer, okay? Okay, so now chapter 1. Chapter 1 is a great way of introducing the idea of accounting and its purpose, which is, at this point, we've talked about recording and reporting. Unfortunately, though, it's really not realistic to use this kind of a system. So, for chapter 1, we did this, and I'll just make sure we're, sort of all on the same page here. We had this, column. I don't know why I have such a big space here between, but I do. We had this column method. We used columns to, do all of our transactions, and we went down through and we balanced after each one. You guys, that looks familiar, right? I mean, you're working on a graded assignment, for heaven's sakes, that has this in it. I hope it looks familiar. But in any event, we use this to identify or to jot down or to record our transactions. This is great for learning about the recording and reporting process, but it's not very realistic. It's not very efficient. In our examples, we've only had 3 or 4 asset accounts at one time. We've had, the most liabilities we've had are 2. We had accounts payable, we had notes payable. We had, common stock dividends. We had 1 kind of revenue, maybe 3 or 4 expenses. But what happens is when we start to get into more complicated business types or additional transactions that we haven't recorded yet, that account list is going to grow. And it's not unusual for companies to have 50 or 60 asset accounts, even small companies, or 10 or 12 liability accounts. Maybe only 1 or 2 stock accounts and 1 dividend account, but like multiple revenue accounts and multiple expense accounts. Is that going to fit across our paper in that nice column format eventually, the more we add to it? It's not, right? I mean, our papers are only, 8.5, wide. My board, I could fit quite a few across there, but I can't fit everything. So it's not really the most ideal way to actually do this. So we're going to be kind of transitioning into the formal accounting system. If you were in an accounting office, what kind of journals or records or computerized systems would you actually be using to record these activities? Because you wouldn't use this column format, okay? Not in real life anyway. But it's great for learning the concept. There are basically 2 things that this achieves for us. Let's talk about that. The first thing it does is it allows us to identify the amount of the transaction, right? It allowed us to identify the amount of the transaction. And this is kind of just review. So we're sort of stating the obvious here, right? So, for example, if the owner gave cash to the business, we did this, right? Didn't we? That looks familiar, correct? That identifies the amount of the transaction. And then once we had another transaction in here, we started to do what after each transaction? We started to calculate the balances of every single account after each transaction, correct? So that was the other thing that it allowed us to do. It allowed us to calculate the balance of each account after every transaction. Every transaction. Right? So those are the 2 things that really achieved for us. We still need those 2 items, but we're going to come up with a better way of doing it in Chapter 2. In Chapter 2, you're going to learn about the formal accounting system and some additional terminology that we accountants use. Okay? And we're going to go back and revisit financial statements eventually, because doing them once or twice, we don't learn them. We don't remember how to do them. You guys with me so far? So this is kind of something that's been repeated from Chapter 1. We have external transactions and internal transactions. So we're going to have transactions that take place between us and other companies. Those are external. And then we have transactions that are going to take place internally. For example, between us and our employees. Okay, those are internal transactions. We don't really need to identify them as external or internal. So not really much else to say about that. The process that we're going to use, though, now we kind of throw the word in there, analyze. I've been saying we're recording, but the thing about our recording is we've been told what to record, haven't we? What do I mean by that? Well, you have a textbook, or we've had examples where the examples in the textbook said what to you? Oh, transaction A is this, transaction B is this, transaction C is this, transaction D is this. Unfortunately, real life isn't like that. When you go to work in an office, if you're an accountant, nobody's going to give you a list of transactions to plug into your computer, unfortunately. You have to figure out what is worthy of recording. And how do you do that? Well, you got all kinds of paper documents that'll cross your desk. Things will come in the mail. You'll be creating documents that'll get mailed out. You're going to have to decide which of those requires you to actually record something or write something down. We call those source documents. We use source documents to decide, in real life, textbook is what we use in class. We use source documents to decide, what transactions actually have to be recorded. We analyze those source documents, we look at them, and we determine whether or not the information on them requires us to make some kind of entry in our official accounting records. You're going to be learning about official accounting records. So chapter 1, that's the method we use. In chapter 2, we're transitioning to more formal accounting records. What's going to take the place of this is two parts, or two components, and they correspond to really the two goals that that particular format achieved for us. The first is going to be something called a journal. Now, if people say, I keep a journal, what does that mean they do? Write down what? What are they writing down, you think? Okay, about? Typically, if you keep a journal, what are you writing in that journal? What are you writing in a journal? In a daily journal, what are you writing down? Oh, okay, so you're talking about a financial thing. I'm talking about like a personal journal.
Whatever happened that day.
Yeah, whatever happened. I'm sorry, I wasn't clear. Whatever happened that day. So people say, I keep a journal. They're normally writing down the events that occurred in their life, right? On a daily basis. Okay? Businesses do the same thing. They write down in a journal the events that took place in the business's life. Same idea. Now, the journal for a company is going to look a little different than your personal journal, but it is the same concept. So a journal is a record of a transaction, and the amount of that transaction. Same as what we did in chapter 1. Now, you haven't seen what a journal looks like yet, the official journal, accounting journal, but you gotta trust me, we're gonna be using something called a journal. So it's not like a personal journal where you write things in, but it's the same idea. But there are certain characteristics that an accounting journal has that allows us to keep track of these things. Okay? You with me? The second thing that we're going to do is this word post. I'll explain what that means a little later. We're going to post information to something called a ledger. Well, the ledger is the place where we keep a record of the balance of each account after every transaction. So this is where we record the balance of each account after every transaction. And again, it corresponds or it serves the same purpose as that column format we used in chapter 1. However, in chapter 1, we can only fit so many accounts across our columns. We don't have enough space. In chapter 2, when I show you what these official forms look like, you'll see that I could have thousands of accounts, and I could still use these two forms and achieve the two goals that I need to achieve. So we're just transitioning. We're not really learning how to record anything new. We're now just introducing you to the official documents that accountants really use in the office. The last thing we'll do is we'll do something called a trial balance, but I'll get to that later. That comes at the end of the chapter, so I'm not going to worry about that right now. You with me so far? Okay. Some examples of source documents. Well, what kind of papers come across my desk that would be an example of something I would actually have to record? Well, there are several, and these are the most common or the most basic, and these are the ones that kind of correspond to our transactions that we've been recording. So the first one you see there, employee earnings records. All right, so we've had transactions where we paid employees. Paid wages of $800, paid wages of $500. That information comes from employee earnings records. Now, in this day and age, most of our records are digital, right, or electronic. I get paid direct deposit. I don't even get a paycheck stub anymore. If I want to see what my paycheck stub looks like, I have to log into MyFrancis and bring it up, on my screen. I could print it out if I wanted a copy, but I don't get a paper copy anymore. But that's still the document, electronic document, that we use here to record what needs to be recorded with regards to payroll. Okay? That's one example. Checks. As a business, you write many checks. You also receive many checks. Anytime at all, a company receives or pays or writes a check, it has to be recorded in the accounting records. That's a source document. So that takes the place of the actual check itself would take the place of, our transaction in our textbook that would say, paid the utility bill $150. Well, we would have a utility bill in front of us with the paycheck, or with the check that we wrote to pay it. Those are the source documents that we would use in real life to actually go to the computer and make an entry. Have you guys heard of QuickBooks? Anyone heard of QuickBooks? QuickBooks? No? QuickBooks is the most popular small business accounting software program out there. If any of you want to own your own business, you're going to have to purchase some kind of software program for you to keep track of your finances for your business. And QuickBooks is usually the number one choice. CPA firms use QuickBooks. Most small businesses use QuickBooks. You can take an elective course when you're a junior or senior, if you're an accounting major, if you want to learn how to use that computerized system. I taught QuickBooks for a number of years. I used it for a number of years. It's pretty user-friendly. It's pretty easy to use. But all of these source documents now are typically in the form of digital instead of paper. I recently got notification from my bank. If I want a paper copy of my bank statement, that's another example of a source document. In other words, where do I get the information that I need to actually record these transactions? Bank statement's one of them. I actually got a notification that says if you want to continue to receive paper copies, you're going to have to pay $4 a month. $4? Really? A month? I don't think so. But for some people, I'll take the digital, copy. If I want to have a piece of paper, I'll print it out. But everything's trying to go digital. The doctor's office yesterday, they had all these papers and forms, signing and filling out. And the nurse said, in 2 months, this will all be digital and you'll be signing on the computer. So eventually, everything is moving to a digital format, even things that we're accustomed to getting in paper form. It's not going to exist anymore. So, we call these source documents, they exist, but they'll exist electronically instead of in paper. Purchase orders. If I want to buy something that I want to use here at the school, there is a process. I just don't go and get on the phone and say, oh yeah, I want to order this, that, and the other thing, and I work at St. Francis. That's not how it works. I need permission. So a purchase order identifies the items that I need, and the proper signature, authorization on that then gives me the right to purchase those things, or however it works out. We go through a different process here, but you get the gist. Sales tickets. How many of you worked retail? Anybody work retail in here? I think that's really odd. I only have a couple. I had no one in the last class that worked retail. I found that really strange. But anyway, when you work retail and you work the cash register, right? Depending on the business that you're working at and how old it is, there are still some people using register with rolls, right? With register tape in it. Those are sales tickets or sales receipts. If you've got the nice scanner that's electronic, and then again, that's all digital, but it's still generating some kind of a ticket, whether it's paper or electronic, that represents the amount of the transaction, of that sales transaction. That's used to record accounting information, okay? So those are just some examples. I've been throwing around this term account for almost, 2 weeks now, okay? For 2 weeks. And I didn't really, say, an account is this, that, or the other thing. I didn't give you a formal definition. But all of these are accounts, each one of these. Examples of accounts. These are all accounts, all right? Textbook definition of an account. It's a record. Yes, it's a record. We've been writing things down. If you write something down, you're recording it. It's a record. You have a record of it. So it's a record of increases and decreases. Haven't I been doing this? Haven't I been, and then balancing after? Haven't I been adding and subtracting, increasing and decreasing in each column, right? We did that, several examples together. So it's a record of increases and decreases, pluses and minuses, in a specific asset account, so cash, accounts receivable, or supplies, in a specific liability account, accounts payable, notes payable, in specific equity accounts, common stock or dividends, in specific revenues and expenses. We only had, consulting revenue, we've had supplies expense, or rent expense, salaries expense, miscellaneous expense. Each one, we keep a record of the increases and decreases. That's what an account is. That's the formal definition. Okay? The general ledger, and I just go back to number 2 here, and I'm going to put the word general in front of it. Means the same thing as just calling it the plain old ledger. The general ledger, or the ledger, either one is correct, is a record containing all accounts used by the company. And that's actually not 100% correct. I wish it said is a record containing all the accounts and their balances, because the ledger contains balances, right? Records the balance. That's important. The balance of each account will be in there. If I don't have the balance of each account, what can I not do that we just got done doing a few minutes ago? What am I going to be unable to prepare? My financial statements, right? All of them. The income statement, the statement of retained earnings, and the balance sheet. I won't be able to prepare if I don't have the balances of all of those accounts. Remember in this column format, that very last row, right? Isn't that where we got all of our numbers? The balances across the bottom that we use then to do our income statement, our statement of retained earnings, and our balance sheet. This is going to be replaced by this now. Okay? I still need to maintain those balances. Don't forget, assets equal liabilities plus equity. Okay? Don't forget that. Let's review a little bit. In this chapter, we build. Remember, we build on the things we learned in the previous chapter. This course, it is a domino effect. Okay? And I tell you that not to scare you, but to make you aware. If you're not getting something in a chapter, it's not like, oh, glad that chapter's over, now I can just forget. No, you got to retain it, or you got to learn it. If you're not sure of it, you need to see me so that I can help you. Because you need what you learned in the previous chapter to be successful in future chapters. Some of these examples that you see up here we've had in chapter 1. We're going to be growing our list with each additional chapter that we cover. So there are a couple things up there that are new. Prepaid accounts, we haven't talked about those. We're going to talk about those in this chapter. Notes receivable, we saw the term before, but we didn't have any examples. We'll have examples. Liability accounts, a couple of those probably look familiar. There's 2 there that don't. We're going to learn about accrued liabilities, and we're going to learn about something called unearned revenue. Those are both examples of liabilities. Our equity accounts pretty much don't change. We will expand and add some different revenue accounts, and we'll add some additional expense accounts that you didn't see in chapter 1. Okay? So our analysis is still going to be based on this premise. This is a theory right here, developed by some monk, right? Back in 14 something. I don't remember exactly when. Assets equal liabilities plus equity. We have that equal sign to indicate balance on each side. The equity section consists of those 4 components. That's not going to change. We're carrying that with us into chapter 2. Now, we already talked about the ledger. Okay, the ledger is a collection of all of the accounts, but it also contains all the balances. Another term we have is the chart of accounts. And I like to refer to the chart of accounts as your word bank. How many of you have ever taken a fill-in-the-blank test? Fill in the blank. We love those, right? No, we hate those. Why do we hate fill-in-the-blank? What's so hard about fill-in-the-blank? Yeah, well, and if you don't have a word bank, meaning a list of words to choose from, you've got to sit there and try to think of the word on your own, right? Without any kind of reference. In multiple choice, you get 4 options, correct? I mean, so you got a 25% chance to get your answer right. If you get a word bank, you at least can see the words that you know one of them is correct. If you have no list to choose from, then you're like pulling things, you're trying to think up of things, and it doesn't usually work out real well. So in accounting, we provide a list to our accountants of accounts to choose from when they're recording business transactions or activities. This list contains all of the account names that you could possibly use. Okay? If it's not in the list, for us right now, then we don't use it. We're selecting from the list. So this is like our word bank for our transaction analysis. What do you notice about these accounts now that we didn't have in chapter 1? What accompanies the account name? An account number. Now, the account number is really important. Let me ask you a question. Why are your checks numbered? Do you guys have a checkbook? Maybe I'm sure you've all seen checkbook. Why are the checks numbered? What's the reason they're numbered? Yeah, Exactly. Keep track of them. That's why they're numbered. Keep track of them. When you have a discrepancy with someone you've written a check to, how do you refer to the check? Check number. I'm looking here at check number 7021 or whatever. I mean, if you didn't have check numbers, my goodness, everything you would have no way of organizing those documents, those checks. It's kind of the same with account numbers. They allow us to stay organized. In a computerized system, they actually provide us an easy way for entering account names. We can enter account numbers. A couple of things I want you to be aware of here with these account numbers. Now, I don't know if you've sort of figured this out already, but the way that we list our accounts corresponds to the way that the accounting equation reads from left to right. Assets first, liabilities second. Second. Equities, common stock and dividends. Next, revenues and expenses. And we give revenues and expenses their own categories because there's so many of them. All right? So that corresponds over here. Look. Cash, accounts receivable, supplies, prepaid insurance, equipment. Those are all what? Assets. You know how else I know they're assets? Even if I don't, let's say I don't know what prepaid insurance is because we haven't talked about it. There's another way I can tell it's an asset. Anybody tell me? Number one. These all start with the number one. In a numbering system, typically, assets always begin with number one. So even if you don't know what prepaid insurance is, you can see that it has three digits that begin with the number one. It's an asset. Now, in your book, we're both basically going to be using just a 3-digit system because we don't have a huge chart of accounts. Okay, we don't have a huge chart of accounts. A company, for example, like Procter & Gamble, might have a 15-digit sequence for their chart of accounts because they have multiple locations, multiple departments, multiple products. It can get super complicated. We're going to keep it simple and leave it at 3 digits. Why do you suppose cash is 101 and accounts receivable is 106? Why didn't we say 102 for accounts receivable? There may be some additional accounts that we're going to add to our chart of accounts later that might go in between those two. All right? You'll notice that, look, between prepaid insurance and equipment, there's a huge gap. We may have additional assets that we're going to be adding in here, so we want to make sure we leave those numbers open for that. Okay? This is kind of color-coded here too, but the next grouping, accounts payable, you know is a what? It's a liability, right? Liabilities are going to start with what number? 2. So even though we haven't talked about unearned revenue, you can assume it's a what? It's a liability. Very good. There are 2 equity accounts that are labeled beginning with the number 3, common stock and dividends. So equity typically begins with a 3. Just those 2 though. So common stock and dividends specifically. You'll notice here we have consulting revenue, rental revenue. Those 2 begin with a 4. So revenues have their own category. Now, what do you notice about the next grouping, or what's odd about the next grouping? Well, we skipped 5, yeah, and there's a reason. When we get to chapter 4, we will have a category that is labeled 5. But for now, general expenses are all going to be 6s. So even if there's something in there that we didn't talk about, the nice thing about expenses, they all say expense. They all begin with the digit 6. That is going to help us. That's our word bank. That's what we're going to have to choose from when we actually record transactions. The only other thing I'll mention today, and then I'll let you go, is in this chapter, you're going to be introduced to the terms debit and credit. In accounting, the words debit and credit are the formal terms that we use for increase and decrease. See, we've been saying increase and decrease. We now have to use accounting terminology. So the words debit and credit, bless you, debit and credit are really proper accounting terms. that are used to describe increases and decreases in accounts. We use something called a T account, which I'll talk more about on Monday. We use something called a T account to help us understand debit and credit rules. These are rules we're going to learn. Okay? But that's a great place for me to stop. Remember, you have homework due Monday. If you need help, please see me. That's the only thing due. I will release the Chapter 2 Learn Smart over the weekend, but it will not be due until later next week.